If you're wondering what's happening in Knoxville real estate, here's your update. Hi, I'm Cole Lyles with Realty Executives. I'm your Knoxville agent, and I'm here to help people make the move to Knoxville as simple as possible. And if you're thinking about moving to Knoxville, you probably want to know, what's the market doing? I get that question all the time. How's the market? How's the market? Well, I'm here to tell you. Now, the numbers we're going to talk about today are from September of 2025. As I'm recording this, it is very early November 2025. And you're probably thinking, Cole, why on earth has it taken you 2 months to get the data from September out into a place where we can learn about it? There's a couple of reasons for that, but the most important one is this. Most real estate data is rear facing. We are always looking in the rearview mirror. We are always looking at things that happened in the past. And a lot of data is like that. The difference between real estate and say something like the consumer price index, where we're getting sense of prices or we're getting sense of how much people are buying or consuming things, is when you go to the store and you buy a can of Coca-Cola, that transaction happens immediately. It gets reported immediately. And within a week, everybody knows how many people have bought cans of Coke that week. In real estate, when you decide to buy a house, you sometimes will put in an application for a loan, which then gets reported. Loan application data is like one of our few forward-facing data points. But then you go and look at houses, you put a contract on a house. Sometimes it's going to take 30, 60, even 90 days to close that contract. And that's assuming that one even closes. Sometimes, we find problems in the inspection. We need to terminate that contract and move on to the next one. So when you're looking at a month's data, it's important to give that time month to close out and to make sure that we have as much of the data in as possible to give you the best possible insights and things that are actionable for you. Because if we sit here and say, oh, well, the median price is really low and Knoxville home prices are crashing, when in reality, all the normal priced homes haven't closed yet, we're giving you bad data that will give you poor insights that will help you make poor decisions. And we don't want to do that. I want to give you the best possible data and still know that it's helpful now and today. What is happening in Knoxville in September 2025? Let's talk about it. The data I'm going to talk about is coming from our MLS, which covers a big swath of East Tennessee. Generally speaking, Knoxville and Knox County is not so far out of line because the majority of our listings do come from Knoxville and Sevier County and Maryville, some of the places where most people live. Then because most of our listings come from most of the places where people live, like Knoxville, Maryville, Sevier County, those are going to tend to have a little more weight in these numbers and therefore are going to look a little more like those numbers. So if you're looking at a place like Morgan County, for instance, some of these numbers are going to look fairly different. Let me know if you have a spot in mind. I can get you these numbers for your specific area. But looking at our MLS in September, our median sale price was $380,000, which is up 3% year over year, which is pretty typical and normal on the historical average. That's what we want to see, slow, boring growth. And in Knoxville, 2024 was a pretty challenging year for everyone nationally in the real estate market. It was one of the worst years we have on record, I think since like 96. I mean, it was just a really rough year in terms of transaction volume, closed sales, the velocity of homes moving. Like there's a lot of things that just were not great. So some of these percentages are going to sound wild. It's up 30% year over year. And you're going to think, oh man, Knoxville's booming. It's crazy. We got to go. It's a frenzy. We got to put in 15 offers over asking. That's not the case. We're starting from such low numbers that when you say, wow, it's 100% increase, it's like, okay, well, it went from 4 to 8. That's big, but it's not that big. So always be a little wary when you hear people talking about percentages if you don't know what that base is. So our median sale price is right at $380,000 in September. Half the homes sold within 31 days. So 31 days on market is a very healthy number. That is a very typical number. You never want your days on market to be in the teens or heaven forbid, elementary school. You want your days on market to be somewhere around here. This typically is going to look like a healthy market, historically speaking. A market where sellers and buyers have to work together to come to a decision about how this home needs to be sold. It's never good when sellers or buyers have all the power. And I'm going to get to that bottom line here in a second. It was 20 last year, by the way. The days on market, we went from 20 up to 31. So things are sitting a little bit longer. If you're thinking about selling, we'll talk about that in our listing consult. Active listings are up 26% year over year. Our supply is trending up slightly. I anticipate that number is going to continue trending up. But again, last year was so low that I don't think it's going to be a jump to assume that things are going to increase in that particular metric. So we have more listings, we have more options. If you've been interested in buying, but you haven't looked in a while, the things out there are going to look significantly different than the last time you looked. And usually we can go see a couple of things in the weekend and make some decisions. We're not trying to write offers on the way there and like sign the offer in the driveway. We're not in that frenzy anymore. The average interest rate in September was somewhere around 6.35%, which is not too far off from where it sits today. It went from as high as like 6.5 down to 6.10 at 6.1, I think. So there's a range there, but 6.35 is roughly where that added up. And for most people, that is a very reasonable rate that allows an increase in affordability. Anything below 6.64%, I'm quoting Logan Motoshami here from Housing Wire, anything below 6.64% for an extended period of time, something like 10 to 12 weeks, usually unlocks a lot of our housing market velocity, usually gives our buyers a lot more options. Again, your mileage may vary. These are averages. I know at one point I saw that interest rates had dropped to like 6.1. And I was talking to a lender. She was like, man, I just locked at 5.9. I mean, or 5.8. Like so talk to a lender. You may have a very different circumstance that allows you to have very specific interest rates that other people may not have access to. So what does this mean? It means that we are seeing a balanced market. It's not a frenzy. It's not a crash. It's not some of these, you're going to see all these things on the national news. You should never listen to the national news when it comes to housing data, because we do not have a national housing market. We have local markets that make up the national averages and the national data. But what's happening in Knoxville is very different than what's happening in Austin, Texas, or what's happening in Orlando, Florida, or what's happening in Sacramento, California. They're very different markets. It's just totally different things. So the numbers are just going to look very different. You need to know what's happening locally to make educated decisions. And what's happening here is if you're a buyer, you have options. We have leverage. We have the opportunity to have conversations, put in offers, negotiate hard, and get what you want. I work with buyers and sellers. I've seen the power dynamic shift. Now, it's not so much that sellers are getting walked on. You know, they're not laying down and taking it all. It's more that there's just enough room for a conversation. Sellers have a ton of equity. They still have bargaining chips. It's not that we're in a position of the buyer can come in and lowball offers. I never recommend lowball offers. They almost never work. And even when they do, it almost never works out. It's just this, unless you're doing an investment scenario, it's just not usually a good strategy. But buyers right now have opportunities to put in offers that are below asking. And we're seeing that in our sold to list price ratio. It's somewhere around 96.5, 97% right now. So the list price, if it's $100, the sold price is somewhere around $97. That means that people are either doing price adjustments or we're seeing that negotiation happen, and it's allowing buyers to get a little bit more bang for their buck. Speaking of, let's talk about pricing and inventory trends. So pricing in general has stayed relatively flat. Again, the median sale price is up 3%, and that's exactly what you want. We don't want these huge spikes in our pricing because it boxes out buyers, it boxes out opportunities for people to get onto the property ladders and buy their first home. It's really hard when the house that used to cost $150 suddenly costs $350. Well, I don't make that much more money in a year. I'm sure that if you're working a 9 to 5, you didn't get a pay increase that was a 30% bump year over year. So when home prices skyrocket like this, it's not healthy. So a 3% year over year is really what we want to see. Zillow predicted for 2025 or 26, I can't remember which one, but in the future, a 2% increase for the Knoxville market. And there's other markets where they project a decrease. Knoxville is relatively buffeted from some of the ups and downs of the broader national scale. So we're in a position where usually homes tend to move up and to the right, slow and steady. Our frenzy from 2021 to 23 or so, I believe that was a correction from some of the years we should have been seeing the slow and steady and we weren't. I think we kind of got to where it could have been, should have been. I say that loosely because it still was a crazy increase in price. But now I think things are going to continue moving at a slow and steady pace. At least that's my hope. My crystal ball is as good as anybody's. It's pretty cloudy. So anything could happen tomorrow, but as of right now, that's what I'm thinking. Another piece of this, inventory has increased. Inventory is up 26% year over year. And if you're a buyer, it means you have options. We can negotiate, especially if you're willing to do the work, get your ducks in a row. You can get a great house for a lot less than you could a year ago. And if you're a seller, it means pricing right is critical because homes that are priced correctly are still going very quickly. It's just understanding what that list price, that invitational pricing needs to look like, and what the marketing strategy needs to be around that to attract the right buyer early on in the process. And it's a shifting market. So it's always a moving target. We're always adapting to the market and figuring out what's going on. So if you're thinking about selling, thinking about buying, make sure you've got the data, make sure you've got the information you need to make the best possible decision. So should you buy or should you wait? Kind of depends on your situation. My advice is always buy when you're ready. Trying to time the market is not usually the best move because you sit and you wait and it's ready, set, ready, set, ready, set, and you never actually hit go, even when you see 100 great opportunities come across your desk because you're waiting for some magic number that's going to make this all make sense and it's not coming. So I say when the affordability makes sense, when you have the money, when you have the financing set up and you're ready for home ownership, if that's a goal of yours, then make the move. And sure, if you're in a position where the rates are changing rapidly and you want to wait 3 days before you lock, okay, that's fine. Your lender can kind of help you understand that. But that's not always a good move because as we saw recently, when the Fed met to lower their Fed funds rate, mortgage rates went up because I'll do a different video on this one day. They're not the same thing. They're related, but they're not the same thing. So markets drive mortgage rates. Mortgage rates right now are around 6.3. I think it's somewhere around there. That number is very affordable for a lot of people. It's going to create a lot of affordability options. So if it's been a while since you've looked at the market, you're interested in buying, give it a look. Talk to a lender, see what you could afford right now. Let's see how far your budget can go. But if you're planning to be here for the next 3 to 5 years and the only thing holding you back is someone telling you to go for it and you're ready, then this is a great time to buy. The opportunities to negotiate are here. The opportunities to see multiple things, make educated decisions, it's here. So, and if you're looking to sell, this is a great time, but we need to be strategic in how we do it so that you can get what you need out of the sale and the buyers will choose your home over the many options that they have available. I know this is a lot. If you want more specific data about what you're looking for, let me know. Or if you want to talk about making a move like this, I've got a Calendly link in the description, gets you on my calendar. It's just a 30-minute consult call. No pressure. It's not a sales thing. It's nothing like that. Just get to know each other, see how I can help. Jump in there, get on my calendar. Let's talk about your specific scenario and how I can help. If you're looking to make a move, I would love to be your guy. I'm boots on the ground in Knoxville. I help people move here all the time. It's one of my favorite things to do. And until next time, thanks for watching.